You can get an accountant to file your accounts and taxes, and they'll do it for $1,000 or something like that. But that's not what you need. That has to be done.
Yeah.
Okay, has to be done, and we all do that. But it's the bit on top that can really make and save you a lot more money and time and peace of mind. Those types of things.
Hello and welcome to the Director First podcast. Today we're going to be having a chat with a chap who I have been stalking for the last few months on LinkedIn because I really enjoy his content. He seems to make a very, very dry and, dare I say it, sometimes people can find accountants a bit boring.
Oh, never.
I come across this guy and I thought, you know what? I love his style. We're both in very dry industries, Carl. And I like how you make something sound interesting with your, whether it's videos or a lot of your posts on LinkedIn. It caught my eye. So welcome and thank you for joining the podcast, mate.
My pleasure, Chris. Thanks for having me. Looking forward to this. It should be fun.
Could you tell us? I mean, obviously, I know the firm you're at right now. You've been with GMR Accountants. You're only over in Southport. I didn't realise you were so close.
Yeah.
And you've been running that business for over 10 years now.
Correct.
Could you tell us a little bit about your background and sort of, how you ended up where you are today?
Yeah. The short version is by accident, Chris. The longer version is, if I go back too far, I wanted to be a footballer. I was pretty good at school. Got injured, and then it was a kind of like, oh, I've got to actually learn. I've got to turn up and pay attention now. So I went down the typical route of college and university, just did business studies to float my way through and get drunk, essentially. And then it was kind of like, oh, I've got to go into the real world. What am I going to do? And for some strange reason, numbers were my thing. Everybody else hated them, but they were the only lessons that I enjoyed. So, I started applying to lots of accountancy places. Got myself, everybody turned me down. I got myself a summer job here in Southport, and the chap, Dave, his name was, brilliant guy, said, do you know what, I'll take you on, Carl, and I'll pay for all your training. I was like, oh, brilliant. Had no idea what I was getting myself into. The training was brutal. 3 years of accounts exams was horrendous, Chris. And anyway, got through that, moved around a couple of times. And then I came here where I am now in a kind of different guise. I was the employee, and they'd kind of sold the dream to me that, look, Carl, we won't be around forever. We're looking towards the future of the business. And that was basically it. So I started, and then in 2012, the guys offered me to buy in as a third partner. Mm-hmm. And then it's at that point, Chris, that I really learned what accountancy was about. Because before, it was all about preparing accounts and tax returns and being as productive as I possibly can, getting through as much work as I possibly could. But then when I owned the business and wanted to make the business the best it possibly could be, I went on a bit of a journey, if you want to call it, as to what should a good accountant be doing. And the answers that I found, Chris, were not necessarily being dead good at producing tax returns and accounts. It was more about helping people, business owners particularly, understand what's going on in their business. And that's what I've kind of been doing for the last 10 years or so, just working much more closely with my clients so that they can really understand what's going on in their business and plan and budget and forecast and not be caught off guard, essentially. So yeah, that's a bit about me and the background, Chris. So now it's just me and Jonathan. Chris, who was the other partner, he retired in 2018. So it's just the two of us now, and we've got a team of 12 of us in total.
You mentioned something there that's really important for directors, because most accountants, they will just prepare that, all the statutory filings, put the accounts in on time. And a lot of directors think that their accountant should also be doing bookkeeping, profit and loss, projections, cash flow, And there's a real big disconnect there, I think, with because them services are available with certain firms, but it isn't the standard package, is it? You know, it's
No, it's not, Chris.
So getting into that type of work, who's your ideal client?
Ideal client is someone, or first and foremost, it's not the business, it's the people driving the business, whether that's 1, 2, 3, 4 business owners. I'd say an ideal client for us is typically 2 business owners. When I reflect and look back over the years of the clients we've worked really well with, it tends to be the ones that have got 2 business owners. Because typically with 2 business owners, you've got one pulling one way and the other one complementing them. So those businesses tend to work well with. But really, it's anyone that's got a growth mindset, anyone that's willing to learn and not be closed off. It doesn't necessarily. It's not to say we would only work with £1 million firms. You could be turning over 100,000, but if you've got aspirations to grow to £1 million the right way, then we could be a really good fit for you. And it's that point where you can't afford to have somebody in-house running your finances full time, but you're not big enough that you have to have somebody in-house running your finances. It's that middle ground kind of sweet spot where I find that we can really get in there and help the business owner or business owners to really make a go of their business and almost be kind of their partner in crime along the journey.
And any specific sectors that you gravitate towards? Any specific sectors that you've had particular success with over the years?
I'd probably lean towards more kind of service-based businesses that we would prefer to work with. It's easier to say the ones that we're not really good at or don't really have an appetite for, and things like e-commerce and things like that with complicated VAT rules and stuff like that. Not really for us. It's more the service-based businesses, Chris. I've got chiropractors, dentists. I've got back office teams that provide a service for the people. We seem to work really well with them, but also it's not limited to that, because I'm thinking of other clients now that sell products, but higher end products, higher margin products, where it's not, pricing is a huge factor in business, and I feel that we can add a lot of value in that area when you sell on value rather than you selling a commodity. There's more value, there's more work that we can do, and there's more. How do I describe? There's more of a story behind the numbers, Chris, I think is what I'm trying to say, and that's what we enjoy.
I get it. I was on a call earlier, and they tried to pin me down, and they said, "Well, Chris, who is your who is your ideal client?" And I've just come off a call with a really big financial services company, like multiple million turnover, and this morning I spoke to somebody who is literally a one-man band that sadly needs to wrap up his company because his health has suffered. So I think I know who I don't want to work with, and I think that's really important. We had we had an email through off this lady. She'll remain nameless, and we've tried to sort of give her enough free advisory over 6 months, and it's getting to the point where, like, listen, you really should need to do something at the moment. And she's going around quote collecting. Now the problem is the quote that we've given her has basically taken into consideration that this woman has a rather large director's loan account that nobody else seems to be talking to her about. And I've said, well, your liquidation costs are the $5,000 that it's going to cost to get the company wrapped up. That is not what you need to be focusing on. This is going to be in the region of £30,000 to £40,000 based on the information you've got. And she's like, well, anyway, she went off, and then she's come back, and I've just said today, I I says, honestly, we're not a good fit. We're really not. And I know one of the firms she's speaking to, they were quite a good firm. And I said, he will look after you. Because we can get, I've done it before. Like I would have took, when I started, I'd have took any client on. I would have drove to Kent for a £4,000 liquidation. Like I've done that, you know, because I was just desperate for the work. I was like, you know, I needed to sort of make my mark on them. And what are sort of red flags with you with clients that make you go?
It's those kind of things. Like you mentioned LinkedIn, so I'm quite active on LinkedIn, and I'd say 80% of my business comes from LinkedIn. And I get a lot of inquiries, but some of them you're like, oh, I don't want to touch that one. And it's kind of like, how much do you charge? You know, straight in there. No, like, here's my situation. Do you think we could be a good fit? Nothing like how much you charge. And you know you're competing on price, which I'll never do. Because going back to what you said before, you can get an accountant to file your accounts and taxes and they'll do it for £1,000 or something like that. But that's not what you need. That has to be done. Okay, has to be done, and we all do that. But it's the bit on top that can really make and save you a lot more money and time and peace of mind. Those types of things. So what else is a red flag? Excuse me. A red flag is where someone will come to me and just rip their accountant to shreds straight away, and he's not done this, they've not done that, they've not told me about this, they've not told me about that. Have they ever asked the question? They've probably never asked the question. Now, I sympathize there because business owners don't necessarily know the right questions to ask. But at the end of the day, if you've hired the cheapest accountant in the first place, that's what you're going to get. But further down the line, as your business matures and you think, do you know what? Maybe I could do with another meeting throughout the year just to really understand what's going on. Is there anything I can do? Then approach your current accountant and have the conversation. Your accountant might be delighted, think, oh, finally, he wants me for more than just ticking a few boxes at the end of the year. Just because you hired that accountant at the start to just get things done, file the returns, you know, keep you compliant, doesn't mean that that's all they do. So I think, I'm not sure I've answered the question, Chris, but often clients will blame the accountant, but they've got to take some responsibility themselves. It's their business.
I mean, I get it all the time. Like, I'll get an inquiry. I'm going through this, and it'll be that overdrawn director's loan account, and I'll go, do you know what one of those are?
Nope.
Oh, no. The accountant's never mentioned it. And I'm thinking, they definitely have. And then I'll generally have a chat with the accountant, and they'll go, Chris, they've used that business like a personal piggy bank, and and ultimately it's them signing it off, isn't it? And what directors have got to get, they've got to get a little bit more savvy about the finances. And me, I'm really open about this. There was a time in my business that I thought, well, I know my costs are about there and my revenues are about there. We're doing great. Let's just keep going. Let's just keep going. There would be no provision for VAT. So I would have, you know, a few sleepless nights every quarter thinking, oh, God, where am I going to find that? And then once a year, you get the corporation and you'd be like, oh, my word, where's that come from?
Yeah. It's, I mean, sorry, Chris, I'm just saying you're describing the people that I speak to. And it's exactly that. I met with a prospect the other day, and they had an overdrawn director's loan account, and they actually shared with me, because I said, well, what did the accountant say when you met with them to discuss the accounts? They said, oh, we don't discuss the accounts, they just send it via email. And they actually shared the email with me, and the accountant had laid everything out correctly, but there's no explanation there. So they've had a overdrawn director's loan account for 4 years, still have no idea what it is, how it happened, and what the consequences are. And yeah, it's partly their fault, but also the accountant should be meeting and saying, hey, you've got an overdrawn director's loan account, and here's why, and here's what you can do to correct that. And I think that bit's lacking in our industry a bit, just having that overall awareness. But I think it's our responsibility as accountants and IPs to educate people so that ultimately, Chris, someone's not knocking on your door saying my business needs to close, but they've got £100,000 overdrawn director's loan account and potentially at risk of losing their home, increasing their mortgage to pay for it, those types of things.
And that is the problem. I mean, obviously my industry is, there was a report that came out. This was like it was a report to come out in the insolvency profession. I don't know who funded it, but it wasn't a Mickey Mouse report.
Okay.
And one of the lines that come out in this report was the corporate insolvency world was like the Wild West. That was one of the lines, one of the sound bites. And people don't realize that these directors' loan accounts, they are the big problem right now. Aside from these bounce back loans, and if you have done wrong with a bounce back loan, you're going to get disqualified. If you've took one when you shouldn't have done, you're going to get disqualified. Like that's a given, okay?
Yeah. Yeah.
These directors' loan accounts, they're just ticking time bombs, because the typical job I will get, let's do a real basic one-man band, is advised to take small amount of salary, top it up as dividends. And they come to me and they've got accounts not done for a year or two. In the last set of accounts, they're 50 grand the wrong way on an overdrawn loan account. And I'll go, well, how have you paid yourself since those accounts done in 2022? Oh, I take, £4 grand a month. A little bit of salary as the rest is dividends. I'm like, well, you can't take a dividend.
Yeah.
You've not been making a profit since that point, because you've not paid any tax since that point. Anything you've took since then is an illegal dividend, and in an insolvency, it's going to get converted to an overdrawn loan account. And people look at me like I've grown two heads. That they just don't get it. And there's such a gap in the market for digging in with the director and saying, listen, you need to be careful what you're doing now. And that's the stuff that attracted me to your post, because you talk about this stuff. And listen, that's how I get my work, is I just talk about the stuff no one else talks about.
Yeah.
And I try and explain it for the everyman on the street, which is, if I can understand it, then hopefully they'll be able to understand it.
Yeah, I probably talk about it a lot because I see it a lot, Chris, unfortunately. And because I deal predominantly with limited companies, I think it's that mentality, well, it's my business, it's my money. But then it's quite easy for me to flip that round. And when you show a balance sheet, so first thing, when you say a balance sheet to a business owner, it just doesn't register, because no one's ever explained a balance sheet. Profit and loss, yes, we get that. Cash in the bank, we get that. But balance sheet, what the heck's that? And well, just for your viewers, a balance sheet shows all the assets that you own, less all the liabilities you got to pay out. Think of like the equity in your house. House is the asset, and then the mortgage is the loan. So for a business, the assets are money in the bank, stock, fixed assets, people that owe you money. So typically when you pull up a balance sheet, you can see those liabilities, the creditors that we call them, and they will include VAT that's owed, corporation tax, bounce back loans, maybe some other loans in there, your trade suppliers. And with the balance sheet, let's say that's £100,000 in total. Because it's a balance sheet, the other side has to balance. There has to be something contouring that off. Okay, so you would hope that there's money in the bank to pay those debts, but with a director's loan account there isn't. So the other balancing figure is the amount that you as the director owe to your company, because your company's not been making money. Therefore, you've borrowed from HMRC, you've borrowed from the bank, you're in the overdraft, you've not paid your suppliers, so that you can pull money from your business to pay for your personal life. You've got a right to take money from your business, but only if it's profitable. You've got to make it profitable so that you can take those dividends. Otherwise, You're just borrowing money from your business by taking money or delaying paying people. And that's how the overdrawn director's loan account's created. And I think when I can show people that, it's like a penny drops. And it's like you were saying before, Chris, when I can show them, you've got a negative, you've got brackets around your profit figure, which means there's a loss. More has gone out than has come in. Well, how could I take money from myself? Well, last year you owed 50,000. This year you owe 100 to your creditors because you've taken an extra 50. And you start to see the penny drop and be like, oh, okay. So then that flips the conversation. Just because you've got a business does not mean you've got a right to take money from it. You've got to make it work. You've got to make it profitable. And to know if that's working or not, you should be looking at your profit and loss on a regular basis. Are my sales higher than my costs in its simple form? If yes, there's profit there. There might not be cash there, but if there's profit there, you're entitled to a dividend. So when the cash comes through, you can take that. So
what with all these, and again, sort of back to the way I learned through pain. I don't always learn off other people. I got to the stage of like, I need to learn more about this, and I did. I got educated, and I have my profit and loss with me. End of the on Friday, mine will be ready for last month, and I'll be able to look through there, and I know exactly where we're at as the business, and the peace of mind that gave me when I started to really implement this on a monthly basis. Yeah. And I'm not savvy like that. I have a bookkeeper that does it. It's well worth the the money that it costs. But it really did change. It changed my whole business. It changed how I felt about my business, Karl. It was like, we started to implement in when that money comes in. Let's say we get £1,000 plus VAT in, we know that the VAT needs to go into a separate account. Yeah. We know that, on our invoice, what's left, we might save 15 to 20% into a slush fund. And I remember paying the corporation tax last year, and we had more in that account than that was due. And that was just a really nice fee. And sometimes I get a bit embarrassed saying how, slapdash I used to be. But I am a small business owner. I'm like the guys I'm talking to out there. But having that ability to just ping that away, and then what you're playing with in that business. Yeah. But it all goes back to fundamentals, doesn't it? If you haven't got the time to be doing this bookkeeping, or perhaps the expertise, do you guys offer the bookkeeping service there as well? Yeah, we do. Yeah. You've nailed it there, Chris. And shameless plug here. I don't know if you've seen, but I've created this course called Mastering Company Finances, and the first kind of module is exactly what you've just described. It's to show people when the money comes in, this bit's not yours, that's the Batman's. This bit's profit, therefore there's tax on it. And if you implement the system in real time, the phrase I use a lot is, your corporation tax is not a once-a-year event. It happens every day. So every day that you're making money, you're incurring your tax liability. So by reviewing each and every month where you're up to, you can go, okay, we've made 10 grand profit. We estimate there's going to be 2 grand's worth of corporation tax on that profit. Let's move that out of sight. Let's move it away from temptation. So you're building up. And as you say, Chris, if you're doing that each and every month, you will have your corporation tax bill sat there ready and waiting 9 months before it's due to be paid. So you're actually earning money on your corporation tax bill because you can get interest in your own bank account. You can actually pay HMRC if you're the odd one out, and HMRC will actually pay you interest. I had a client, actually, Chris, I've got to tell you this. He used to be a nightmare in terms of, if he's watching this, he'll know who he is. It used to be a nightmare in terms of he was always late with everything. How much do I owe again? When do I have to pay it? 6 months ago, mate, type thing. The other day, we got all of our posts is always from either Company's House or HMRC for this particular client, and it was a check for 8,000 quid because he paid his corporation tax bill early. So HMRC sent him a check for 8,000 quid.
And I took great pleasure in WhatsApping it to him, saying there's £8,000 on its way to you from HMRC for that early payment.
Wow.
He didn't believe me. But he rang me up. So you having me on? Nope. So yeah, and because he's now parking that money aside. When it comes in, the VAT goes over there, the corporation tax goes over there. So it's there at the end of the year. As I say, that's 9 months before you need to pay it. So in his head this time, he just kind of went, do you know what? I'll just get that done. It's out the way. And
it allows you to plan, doesn't it? I mean, I want you to talk about it. Carl, plug Mastering Company Finances. Tell us what it's all about, because I probably deal with, not personally, but as a business, we probably get 300 inquiries a month. Okay.
Wow.
Not all of them, thankfully, end up in liquidation. Okay. We probably generate, I don't know, 30 to 50 appointments maybe a month. Okay. So we're a busy little firm. But absolutely everybody that we speak to, they don't understand where they're at. That they don't understand where their business is at.
Yeah.
And one of the things that we interview clients after liquidation, the brave ones, the ones that will come out and, you know, come on YouTube. And one of the things that they always tell me is the biggest lesson that they've learned from going through an insolvency is to be more on top with their numbers.
Yeah.
It's you know, so please, this is the time to plug away, mate. Knock yourself out.
So the course launched earlier this year, Chris. Mastering Company Finances, it's called, and it's there to do what we've been talking about. It's there to educate business owners on how to get control of their numbers, how to gain real confidence and clarity around their numbers so that they understand where they're at. Like you were saying before, the peace of mind that you get and the kind of little bit of a buzz that you get for knowing you're on the right side of things is massive, because it gives you that ability to push forward and knowing you're making the right decisions rather than scared sometimes to even spend your own money. We've not even talked about the other side where clients have too much money in their account and they're scared to spend it because they think Mr. HMRC is going to come and take it all. I want people to spend their money. You know, you work damn hard for this. So the course is there to give people those basics, the system that we were talking about before, being able to look at your numbers and estimate your VAT and your corporation tax and move that money aside, right down to the personal tax. Because, you know, if your example before, I think I use this in the course, 1,200 quid comes into your business, 200 goes off for the VAT, 200 goes off for the corporation tax, there's some expenses, there's some profit, and then you pull that out as a dividend. Well, also there's tax in that as well. He's a bugger, this HMRC, but he taxes you everywhere, but there's tax in that as well. And that's a personal tax bill, and it catches so many people out. So the first module of the course is all to help people with that, understand where the taxes are going to come from and how to plan for them. And then second module is all about how to pay yourself, how to get as much money out of your business as tax efficiently as possible. And then we move on to what we've been talking about, reviewing the numbers. How does the money flow through your business? How do you even understand a profit and loss account? So I break it down into the main areas, and you start to see your profit and loss account as a series of levers and kind of go, well, if I just increase that by a few percent there, then this bottom figure, i.e. your profit, that will increase. Oh, and actually, if I reduce that figure there, then this keeps increasing. And the more you start to look at it, the more fun you can have, because don't ask how, just start playing with it and going, what if, then go back to the how question. And you start to have fun with your numbers rather than dread looking at them. And then the course wraps up with, well, to get the visibility, somebody has to be tapping away and entering your information on a regular basis. Doesn't have to be you as the business owner. Helps that you understand what's happening, but it doesn't have to be you. So I teach the methods and the shortcuts for getting your financial information into a place that enables you to actually view your numbers so that you can start having some fun, planning for taxes, and ultimately making better decisions.
I mean, I did have a look at the website before, and this is all for a. Is the price still the same as it is on the website?
It is. It is. It's a one-off price. If you're seeing a price that says 197, Chris, then that is the price currently. It will be going up next year, but currently that's the price, one-off fee for lifetime access.
Listen, that is compared to what every single one of the directors I speak to could do with something like this for sure.
Yeah.
Talk about how do you pay yourself?
Yeah.
What is the answer to that question, Carl? Take us down that rabbit hole.
The tax efficient answer. Well, first and foremost, let's go back to what we said before. You must be profitable. You must have a profitable business to be able to pay yourself. Excuse me, Chris. But still, the most tax efficient route is that small salary and the rest in dividends. So the small salary is equal to your personal allowance because that bit's tax free, but tax deductible for your company. And then you're into the dividends realm. So your dividends are then taxed. So they kind of stack on top of that 12,000. And the other 37.5, when you get up to 50,000, that's all 8.75%. So that's cheap, really. Once you go above the 50,000, you're at 33.75. So that's the basics. But excuse me, Chris, this annoying cough. Then you've got things like pensions. As boring as they are flipping tax efficient. Your company can pay into your personal pension pot, and your company can get a tax deduction on that. So let's say your business is a 25% taxpayer. So a corporation tax rate of 25%. If you put 10,000 into your private pension, it saves your company $2,500 and it's free for you. And then that pension you would expect to grow. I think the finance professionals will say it doubles every 10 years, there or thereabouts, Chris. So that's a good way of getting money out of your business. The other good one is cars. Good or bad, Chris, depending on which car you buy. So
I did watch one of the podcasts that you did with that other chap. Go on, tell us about this, because I've got a story I want to share with you about the electric cars.
Yeah, so with cars going through your company, it depends what type of car, ultimately how they're being fueled. Is it petrol, diesel, electric, or hybrid? So the Range Rover is a good example, because rewind 12 months, I'm not sure the electric Range Rover was out. The hybrid, I think it is a Range Rover. So if you bought a Range Rover through your limited company, it would cost you and your company a fortune, because it's a company car and you pay what's called benefit in kind tax on that. So whilst the company's paying for it, you pay a lot more tax on it, so you end up worse off. However, the new Range Rover, which is hybrid, is really tax efficient. So in that scenario, it can be more cost effective to have the company actually pay for the car rather than you pulling dividends out, potentially getting taxed at 33.75%, and then using the net figure to pay the finance on the car. So it really does depend. The general rule of thumb is, if it's petrol or diesel, buy it personally and charge your company mileage for the business miles you do. If it's electric, buy it through the company, or lease. Lease works the same. And if it's hybrid, it depends. I had someone that looking at hybrid recently, Chris, and the different cars equated to $5,000 difference in tax that will be payable compared to the tax efficient one and the least tax efficient one. It ultimately depends how far they can go on their electric range. If they'll go quite far on the electric range, they're good to go.
So I got a few years ago, I got an electric Q4, lovely car.
Yeah.
For this reason. And then I realised in the cold it does 200 bloody miles. And it was, because like tomorrow, I've got a job at the moment that's on the boil in Cornwall. And at some stage it's going to be a code red and I'm going to have to go down there. Right. And the idea, obviously, with an electric car, it's just not doable. I went to Centre Parks last year, and I'm coming out. You know the nice services where they do nice food. I think it's called T-Bay.
Oh yeah.
So I've gone in there to to juice this car up. Anyway, there was an hour wait to get on the thingy. It was around Christmas time. And as I'm coming off, there are two women ready to fight to get on. Like literally, I've wound my window down. They are ready to go hell for leather at each other.
Wow.
And I just thought, anyway, after that, my brother who works with us here, he took it on, and because so it's a great idea, the all electric stuff, but the practicality for someone like me, it's but the idea of the Range Rover, that sound. What are the numbers on something like that? Have you got them to hand?
No, I don't, Chris. It's so with the hybrids. I share this in the course, actually. Another plug. There's like a sliding scale of the car has to have less than, I think it's 50 CO2 emissions, and then it all goes about the electric range. So you picture a table. Let's assume they all have less than 50, and then if it does, I think it's more than 130, the benefit in kind percentage is like 4 or 5%. If it does less than 30, which is quite common for some of the early hybrids, the benefit in kind percentage is 14%. And the relevancy of that percentage is that is attached to the list price of the car. So if you've got a £100,000 car, the benefit in kind is 5% or 5,000 or potentially 14,000, and you pay tax on those numbers. So if it's 5,000 quid and you're a 40% taxpayer, that's what, 2 grand. But if it's 14,000, then it's higher, Chris. I can't think the number. It's like 6 grand or something like that. But
I went for my missus to have a look at a new one, and I think the hybrid thing is if you can plug it in, that's a good.
Yes.
When you don't plug it in, she was looking at this new Peugeot, and she works for the company, so you know we could put it through, and I was advised that it wasn't a good idea because you couldn't plug it in.
Yeah, so if you're plugging it in, it's obviously got separate charge, which means it can go longer on the electric range. So that's the crucial thing when if you're looking for a hybrid through the company, find out how far it can go on the electric range. and obviously a plug-in is a good indicator that will go further.
We touched on this very briefly earlier, and I know it's something that you teach in the course, and it's about issues with HMRC. Now, obviously, you're coming it from an angle of that if you do this stuff, you will have no issues. Okay, I am testament to that. If you follow this very simple process, you will get no surprises with HMRC. Right? People who are watching this either have fetishes for bold chaps with glasses. They may be searching for Eddie the Eagle or Greg off MasterChef and found us. But they're highly likely to be struggling at the moment. The business owners that are behind with HMRC, there is too much month at the end of the money. Now, how would you advise a director that is behind on corporation tax? They're coming to you and they're going, Karl, for whatever reason, I'm interested in a new accountant. I'm 100 grand behind on the corporation tax. My VAT isn't up to date. Where would you take that conversation?
First, I'd want to understand why. How do we get here? I think that's the key thing. It's showing them the position and kind of warts and all. You know, it could be if they come to you just saying I've got HMRC. It could just be that they're shouting the loudest at the minute. You know, they're sending the letters, but there could be other creditors in there as well. So we need to see warts and all what's going on. Where are we at today? How much do we owe, and how much have we got available right now to help towards those payments? Then we're looking at that. Then drills us back to the profitability, or potentially the owner's just been taking too much money. You know, business has been making 50, owner's been drawing 100. You know, try and find some quick wins. Try and release some cash. And then it's down to, right, okay, time to negotiate. Who can we talk to kind of spread these costs and spread these debts and buy ourselves some time? So, you know, if you're going to pick up the phone to HMRC and try and arrange a payment plan, for example, I'd always say try and go for 2 years. You'll probably get 12. If you want to go for 4 and, you know, work back that way. It will also depend on your track record as to how likely you are to get a longer period of time to pay. And the key thing, if you're trying to arrange a payment plan, is that you've got to be up to date with your current stuff. So there's no point arranging a payment plan for VAT if you know you're going to default on your next quarter as well, because it just won't work. So you've got to be confident in your business model that it's going to produce the positive cash flow going forward to enable you to make those payments going forward. Otherwise, you're just, what's the polite way to say that? You're kidding yourself, really. You're just kicking the can down the road. The inevitable is going to come, and they'll probably end up on your doorstep, Chris. It's more of a, you got to pull your head out of the sand, look at where I'm at and how am I going to fix this, rather than looking for those quick fixes. Let's just arrange a payment plan and make that go away for the next quarter. It's not a long-term strategy, in my opinion, Chris. That's how I'd attack it if someone came to me in that position.
I'm with you, and I like what you said about the HMRC. You can get longer than you think you can to pay these arrears, but it boils down to, well, what's actually gone wrong? Is there any hope in sight?
Yeah.
I mean, you said it very politely, but you know, my view is if you are kicking the can down the road, you are pissing in the wind. Like it's pointless. There's, if you've got a viable business that has got legitimate reasons why they're behind with HMRC, and I don't want to plug something you don't want to get involved in, but I've stopped talking to HMRC. It takes too long. I either guide the director to do it. Right, you're of the same
to be honest,
opinion.
a lot of the time, Chris, they won't speak to us anyway. They'll be like, "No, I want to speak to the director."
There's quite a hoo-ha to get to actually get someone to open up to you. I agree.
Yeah.
But the key is you've got to be clear with them, haven't you? You've got to, first of all, you've got to get the numbers, get them up to date. That you know the key things are, you're going to be, if you get a time to pay arrangement, you are going to be expected to pay your next on time. And if you don't, it goes into default. The time to pay arrangement is burnt, and they're going to process, proceed with whatever action they're going to take. Ultimately, it'll be a winding up petition. I'm seeing, I don't know if you're seeing that many with your clients. I imagine a lot of them are on a decent financial footing, but I'm seeing winding up petitions being issued now for figures that 18 months ago, you know, I'm astonished by it.
Do you know, Chris, I've given up trying to figure HMRC out. And it's so frustrating when a client says, I can't afford to pay this bill, what's going to happen? What will they send to me? And I've had clients, I remember one example a few years back where I had this client that was just taking the mick. You know, I think he was about 120 in for his PAYE. And PAYE is typically a bad one. They don't like the PAYE at all.
Yeah.
He had nothing, absolutely nothing from them. They just left him alone and just let him keep building this up. And then I had another client who called me, great client. He says, Carl, I've got HMRC here. I said, what do you mean? He says, they're in the office. I'm like, why? They said, they say, oh, 400 quid. I mean, 400 quid. We look back, he was 6 days late paying 400 quid. And he'd simply just missed it. And somebody's looked at it and go, oh, do you know what? That's on my way home. I'm nipping. And it was one of them. And it's just, I wish I was a fly on the wall there so I could see their process, their system, so that I can get on the front foot ultimately, Chris, and say to clients, right, at this point, HMRC will contact you and they will want this, this, and this. We know the broad strokes, but they're so inconsistent. It's unreal. I don't know if you've found, I've not had any winding up petitions at the minute, but who knows?
I've seen a lot more. I mean, over the years, I have, there's certain agents that you get to know, you know, like if there's a job in X part of the country, because that's how it's divvied up. The whole country will have their own enforcement agent, and most of them are they're really decent people, they're They're just doing the job, and the key thing is you have to communicate with them.
Yeah.
When someone buries their head in the sand, it sort of runs out of, they run out of options and go, right, well, maybe I'm going to send a notice of requirement, which means, okay, you're not paying your VAT or PAYE, but I want a security deposit of 50 grand as well. And all that does is just pushes them towards an insolvency practitioner. But what I've seen recently, in addition to winding up petitions, is where they're going and taking control of goods.
Right.
And that's where I had a garage. I mean, how on earth is, I never got that far with this guy. He was 150 grand to the revenue. And they've come and they've basically gone around with the clipboard, they've signed it. So from that point, the revenue own those assets. They're not going to take them immediately. I'm sure they've been taken by this point. But even if they looked at like some type of pre-pack admin liquidation, they cannot sell those assets because they have been taken under control of the revenue.
Right.
And the problem is all this is avoidable.
Yeah.
Like they don't generally just one day and go, ta-da, I'm here and I'm going to take your goods, I'm going to wind you up.
Yeah.
There's a lot of to-ing and fro-ing that's gone on beforehand, and either a director has buried their head in the sand and thinking it'll go away,
Yeah.
or they've gone the other side and gone, right, well, actually, I'm willing to do this deal with you, but they're agreeing to terms they're never going to be able to handle.
Yeah.
And I suppose it all feeds it back into what we were speaking originally, is if they get some financial literacy in their business, they're going to know roughly what they're going to be able to pay the revenue in a time to pay and still have all their other operating costs. So what winding up petitions, they're more prevalent at the moment. They're being used a lot more regularly. But again, I imagine a client of yours is up to speed on this, and you're training them properly. You're giving them proper training so they can go out and they can, they run the businesses successfully.
That's the plan, Chris. I mean, you can only do so much. So I'm not going to sit here and say every single one of my clients is squeaky clean. They've all got the money set aside. That would just be absolutely false. I do my very best, and the rest of the team do as well, to educate them on that. And it's a case of, it's like what you were saying before, the guy with a garage, can he actually get out of it? A lot of people will just bury their heads in the sand and say, if I just work harder and do more hours and just grind away, then naturally it's gonna sort itself out. Often it's not the way. Sometimes it takes a fundamental change of the business itself, because when you owe a lot of money, you go into panic mode, don't you, Chris? And what can I do to earn some money? And you can make some really poor decisions. If you start, I just need more sales, I need more customers, I'm going to discount my prices to get more customers through the door. You will quickly find out that you're now making less money than you were before, because discounting is the biggest killer of profits.
Of course.
And more customers just means more problems. And you've got to take stock and look at where you're at. And that's what, we do as a firm. Sometimes we've got to be the bad guy. It's great to sit there and go, yeah, things are okay, I'm sure you'll sort it all out. Sometimes you've got to say, look, if you don't change something now, I had the conversation last year, said to a guy, if we have this conversation in 12 months' time, you will be that far away from shutting the doors. So you need to make a decision now. Can you do this, or should you just go and get another job? Luckily, he's turned it around. He has turned it around. There's only so much we can do, in terms of saying, look, here's your business, here's the position. It's up to you to go and change things. Luckily, this guy he's done a good job this year. But yeah, it's ultimately our responsibility to not always be the nice guy and say, look, this is the position. If it doesn't change, you're in some hot water here.
So this will be going out in 2025. Okay.
Wow.
So what's your outlook for the year in 2025? Have you given next year much thought, Karl?
As in for me personally, or as in
Yeah, first of all, for the economy, how do you think it's going to pan out? How do you think it's going to affect small businesses? And then personally, for you and your firm, what is the focus and drive for next year?
I think small businesses, I'm going to go on the positive side, Chris. I mean, we just had this budget, and everyone's kind of got their knickers in a twist a little bit about it. We knew higher taxes would come in, but
could have been a lot worse, couldn't it?
It could have been an awful lot worse, Chris. But for me, that should just be the driver to go, hang on, we're going to keep getting taxed more. As long as we make more money, as long as we are more profitable, then we'll be okay. And just, I'm hoping that business owners will see that and go, and they just think smarter. It's not always about working harder and grinding out the hours. Sit back, look at your business and think, and try and be a bit smarter with it. And I'm hoping next year will be a positive one, Chris, and I'm sure it will be. I'm sure it will be.
I think a lot of it's down to mindset as well, isn't it?
It is.
You know, once you've got your mechanics sorted, I'm not a Pollyanna type of person. I've talked about that a lot. Is sometimes a positive outlook can actually really, really cause you problems.
Yes.
But if you've got good advisors, you know your business numbers, then I think positive thinking is a really, really good thing. It's you know, you go around miserable, negative all day, and you know everything's crap, and life will give you more things to be miserable about. I'm a big believer in that.
Absolutely, absolutely. So you're right. It's the mindset thing. You get your mind right, and you know, nothing. I never concentrate on anything I can't control. I haven't watched the news for years. My wife hates it because she's like, "Did you know about this?" And I don't watch the news because it's all negative, and it just brings down your mood. I just focus on the positives and what I can control and push forward from there, and then hopefully that will then spread.
Yeah, no, I agree completely. Carl, I'm conscious of time. I've really enjoyed this chat, genuinely. And again, you know, I really like your content's fabulous. It's you give a lot of free info out there, and I know on the back of that you're giving more than most people. Most people want some pennies off people before they do anything, and I think that school of business is slowly dying to death.
Yeah.
And hats off to the people like yourself who are going out there and giving and giving and giving and giving, because I know it's worked for me. We give a lot of free advice out there, and we get a lot of work from it because I don't think it's that hard to stand out nowadays. You know, as
not in our industry, Chris, at least.
Yeah. So I mean, is there anything else you'd like to touch on before we wrap this up?
No, I think we've covered everything there, Chris. Likewise, I really enjoyed this. It's nice to speak with someone on the same level that are seeing the same mishaps that I see on a daily basis. And you and I singing from the same hymn sheet will hopefully, you know, impact at least one person today, and then that will then breed on. So yeah, it's been a great conversation.
Carl, just so everybody is well aware, if they want to find out more about Karl Roberts, and we will in the description on YouTube and anything else, we will be putting all the links in there. But where else can we find out more about you and your business and what you're up to?
Yeah, LinkedIn's the best place, Chris. Just connect with me on LinkedIn. I'm a one-trick pony. You won't find me on Instagram or doing dances on TikTok. So yeah, connect with me on LinkedIn, and yeah, I look forward to speaking with people there.
Listen, thank you very much for your time. I'm going to wrap up the show now. Thanks for joining us, Chris Worden, Director First. Many thanks.
Cheers, Chris.